Hey, what's up guys, welcome back to the channel. In today's video, we're going to be doing a fundamental and chart analysis of Plug Power, or ticker symbol PLUG, to see whether or not this is a strong buying opportunity at these levels. This video is going to be the second addition to the brand new StockDives series on this channel, where I provide simplified analysis and price prediction for companies that I'm in the process of actively researching to potentially add to my own investment portfolio. And in this video, I'll be going over probably one of the best clean energy companies out there. We'll go over their market opportunity, growth potential, and we'll also take a look at their chart to see where the shares could be headed in the short term. So before we get into it guys, make sure to drop a thumbs up and hit that red subscribe button if you haven't already. For those that might be unfamiliar with Plug Power, this company essentially makes and sells hydrogen fuel cell systems for things like forklifts, light commercial vehicles, and also stationary backup power devices for businesses like data centers and telecom towers. Now, the reason why hydrogen technology is so beneficial in all of these markets is because it provides zero combustion power that is cheaper to run, more durable, and much higher energy density when compared to things like lithium-ion batteries. And these benefits are exactly what Plug Power has created a business model around. And so far, at least, the results have been quite impressive. As you can see, over the past decade, these guys have seen a very steady growth curve, resulting in roughly a 5x in revenue from 2014 to 2020, which was accompanied by the installation of over 100 hydrogen refueling stations and roughly 40,000 unit shipments of their in-house fuel cell systems. And this vertical expansion in the company's growth is exactly why I think Plug Power is setting up as a solid play in the entire hydrogen sector right now. So over the past 2 decades, these guys have built a really strong business model around fuel cells for forklifts and other warehouse gear. But in recent years, they've drastically shifted their focus outside of this material handling market and into the electric trucking and hydrogen infrastructure business as well. So not only are they developing customer equipment, which is their largest source of revenue right now, but their 2024 plan for $1.2 billion in sales now also consists of hydrogen fuel production, its liquefaction, and the entire logistics of selling it to its end users. This vertical integration is pretty darn important in my opinion, because as the demand for hydrogen rises from the usage of fuel cells and all these different markets we just talked about, the supply of hydrogen also needs to keep up with the demand to make sure that the price of hydrogen is obviously cost competitive with fuels like diesel and natural gas. As you can see, Plug has a partnership with Linde, which is a chemicals company, to develop green hydrogen facilities and delivery systems so that the overall carbon footprint of the entire supply chain is reduced. Green hydrogen, for those who might not be familiar with it, is essentially when hydrogen is made through electrolysis and renewable resources instead of steam reforming, which actually releases a lot of carbon dioxide. And the real benefit here is that if you use this green hydrogen to power fuel cell cars and trucks, you're basically eliminating all carbon emissions from both the use point and the creation point, which is huge. To support this zero emissions movement, Plug announced the acquisition of 2 major green hydrogen companies in 2020, Giner ELX and Universal Hydrogen. These 2 buyouts should theoretically provide Plug with all the main hardware they need to build out their green hydrogen roadmap. But obviously the supply chain is quite large, so I would expect this project to take at least 2 to 3 years to generate meaningful revenue. But nonetheless, it's a great step in the right direction. Now, in addition to hydrogen generation, these guys have been quite busy with their mobility side of things, as they've announced several joint ventures and partnerships over the past year with companies like BAE Systems and Renault. Both of these companies are expected to provide Plug Power with essentially what are EV platforms and drive systems, in which Plug will integrate their own pro-gen fuel cell engines to power them. Plug will simultaneously also provide hydrogen refueling infrastructure to the customers that purchase these exact fuel cell vehicles. So all in all, Plug has created a pretty clear vision for the next couple of years, which is something that the company lacked before 2020. And generally speaking, this kind of fundamental validation through joint ventures and strategic partnerships is exactly what Wall Street tends to be looking for. And that's quite clear from how the shares have performed in the past 10 to 12 months. And in my opinion, I don't think that trend is going to stop anytime soon. So now that we've had a look at the underlying business model of Plug Power, let's have a quick look at the financial statements of the company to see what the trends are in the company's underlying business model and to see where the company could be headed in the near future. So here we have a look at the quarterly statements for revenue, net income, cash flow, and also return on assets. But the main charts I want to focus on here are the revenue, which is on the top left, the top right, which is the cash and debt, which are put on the same chart, and then the bottom left, which is what we have, is the operating cash flow. And all three of these metrics are typically the most important metrics for a lot of investors, and that's why I want you guys to focus on them. So let's start off with what we have on the top left, which is the revenue and net income. So the revenue here is what we have highlighted in gray. And as you can see, like I said earlier in the video, we have a really steady and strong trend on the revenue, which is obviously an important factor and shows that there is an industry demand for the products that Plug is obviously selling. And you can also see that we've seen a nice decrease in the net loss for the company, which is what we have in red. Obviously, it's fluctuating up and down quite fast because at the end of the day, this is a cash burning business. It's a growth company. So there is obviously going to be a lot of cash that is going to be burned, but that is something to not be too of a concern of as long as the revenue is growing and obviously the fundamentals of the business are also growing. Now, one thing to note here is that you might notice that we have this huge red bar, which is the net income line. This one is something of an anomaly because these guys did reinstate and alter their 10K for 2020, which is their annual report. And as a result, this is an accounting principle error that typically tends to happen whenever a company changes their books or they change their accounting principles. You see a negative revenue and also you see a negative net income. And that's exactly what we're noticing here on Plug Power. Now, moving on to the cash and debt, you can see that the company has quite a lot of cash on hand right now. As of the first quarter of 2021, they've mentioned they've raised around $4 billion of cash, which puts their cash total to around $5 billion, which is really impressive on a company that's trading around that $17 billion market cap. And as you can see, the trend in their cash has been quite strong over the past 3 to 4 years, and we've seen record cash levels on the company as of 2021. And you can also notice a really important trend, which is the fact that the debt of the company is actually coming down. As you can see, we've had a lot of leverage on the company. The company has leveraged itself and financed quite a lot of its projects and obviously its capital expenditure. But recently, we've seen that their debt levels have actually gone down, which is obviously a good sign. And if this trend does continue into 2022 and 2023, obviously that's a great sign. That means that the company is making its processes and operations much more efficient, something that should reflect in their net income. And then finally, up here, we have in the bottom left, the cash flow or the operating cash flow for the company, which is a very important metric for a lot of investment bankers and hedge fund managers, which essentially is a figure that shows you how efficient the company is in managing its cash position. Because at the end of the day, the investors are looking for dividends and they're looking for essentially repayments to the company shareholders. And the more cash flow the company can generate in terms of operating cash flow, the better it's going to be for shareholders. So typically investors are looking for good, healthy uptrends in the operating cash flow, but it's something that you will not see in a growth company because at the end of the day, a growth company is a cash burning business. And it's a very similar case here with Plug Power. We are seeing a nice trend in the operating cash flow to the upside. We are getting less and less negative, which is obviously a great sign. And in the most recent quarter, we've actually seen a positive operating cash flow. But regardless, it's really nice to see that these guys have been reducing their loss in their operating cash flow. And I would not be surprised if these guys report another positive quarter for operating cash flow, which should be a great sign for the future. So now that we've had a look at the financials of the company, let's just have a quick look at this chart to see where the share price could be headed in the short term and what could be good buying opportunity price levels for the specific stock. So as you can see, this company has been extremely volatile in 2020 and 2021, but generally speaking, after a move like this, it's very normal to see pullbacks, certainly like what we've seen here with Plug. I mean, at the end of the day, when funds are pouring in a lot of money and so are retail investors, funds at the end of the day are not going to buy at ridiculous valuations. They typically have a target in mind, and in this case, clearly it looks like the target was around $75. And after that, we've seen a lot of distribution from the funds. They've been cashing out, and as you can clearly see, the share price has made lower highs and lower lows, and it's done that for around 3 months, right? And it's been painful for a lot of retail investors, but at the end of the day, I think it's important to realize that as an investor, patience always pays. And it's also important to realize that you should not be buying at very extreme price levels, which is exactly what we were seeing here in January and February of 2021. And now you can see we are trading around the December 2020 price level, which is right before the announcement with the Renault partnership for Plug Power. So at the end of the day, we are trading at a really attractive valuation, even though we've seen a pretty big move in 2020 from that $3 level even to that $29 level. It's a pretty huge move, but it's at a nice valuation compared to where the stock was trading at just 4 to 5 months ago. We're still in an uptrend on the long term. As you can see, we've made a higher low here compared to this previous low that we made in October, November of 2020. And now we've come above this purple line, which is that 50-day moving average on the daily time frame. So that's typically a great thing. That means that this is potentially forming a medium-term uptrend. And if we do see a breakout from this, I would say this 34 to 33 level, this can easily see a gap fill to around that $42 mark in the short term, potentially in a few weeks, especially since we're seeing a lot of the growth sector, see a lot of money inflow into it and out of the consumer cyclicals, which is obviously a great sign. And on the downside, if we do break below this $28 support level and underneath this purple 50-day moving average, I would say some good buying opportunity zones are definitely that $20 mark. That $20 whole number is a big psychological number. And as we've seen a huge amount of volume and funds pour into the share price at that price level. So I think that's a really good fundamental price support. So if we do get down to 20s, I would say that's more of a load the boat zone. But in the short term, below 28, around that $26 level, and even that $24 level is a great add zone on this guy. And another important thing to note here is that on the RSI on the daily time frame, we are trading underneath 50, which is a good sign, meaning that the shares are technically undervalued compared to where the shares have been trading in the past. And as you can see, whenever in the past the share price has come down to that $50 region on the RSI, the shares have a pretty big history of bouncing pretty aggressively, especially when they are in an uptrend, which is exactly what the shares are in right now. So that's another technical factor to consider if you are looking to invest in Plug Power. But again, this chart is looking really good. It's nice to have this nice little pullback. The deeper the pullback is, typically the faster and the more aggressive the rebound is going to be. So generally speaking, this chart is setting up pretty nicely. So obviously the question on everybody's mind is, what is the bottom line on Plug stock? Is it a buy at $29? In my opinion, yes. I'd call this a high reward, medium risk play, primarily because there is a lot of execution that still needs to be done from the management team to reach all of its promised goals. Now, don't get me wrong, the growth potential is enormous, and even though the stock is trading at a really expensive valuation of roughly $300 forward PE multiple, it's most likely worth that premium since Plug is arguably the leader in the entire hydrogen sector. It's a similar case to companies like Tesla, Enphase, and Etsy that are trading at very rich prices, but Wall Street accepts them because at the end of the day, those companies are industry leaders. The demand for liquid hydrogen is rising fast, while the cost of components for fuel cells is coming down really fast as well, both of which will work together to improve Plug's margins and could be a real driver in growth for this company. I personally think Plug is going to be the best hydrogen play for the next 10 to 20 years, and I do think given the fact that this company has shown that company is able to execute on a high level, they have partnerships in place to be able to succeed not only in the United States but also in Europe. I think this is setting up for a great investment opportunity for at least the next 5 to 10 years, especially since I expect the hydrogen economy to really start running and getting its foot on the ground starting 2030. But anyways, guys, let me know what you guys think of Plug stock in the comment section below. I hope you guys enjoyed this video. Let me know by dropping a thumbs up and also hit that subscribe button. But that is all from me in this video. I will catch you guys in the next video. Take care.